Good day, Forex Chasers. Speaking to you is Lesiva Mutupi, and thank you so much for making it up to lesson 15. This will be a very valuable lesson as we're going to be covering backtesting and going through our trading plan. The topics that we're going to cover on the trading plan is what is a trading plan? Who needs a trading plan? What will a trading plan do before you start? Okay. And then we're going to be looking at drafting a trading plan, meaning that we're gonna be looking at knowing yourself, your purpose, trading goals, your market instruments and timeframes, tools of the trade before the market opens, the risk and reward management. The risk management, the money management, and the exit strategy, the trade strategies, and the after the market closes, discipline and golden rules. Okay. Now let's start off first with the first one. What is a trading plan? A trading plan is a complete set of rules that covers every aspect of your trading life. Many experts refer to the need to have an edge, which will tip the balance of probabilities of your success in your favor. In itself, a plan is not an edge, but over time, the trader with a plan will fare a lot better than the trader without one. Many amateur traders do not have any sort of plan to trade by and enter the markets with sand and regard to their risk and profit objectives. Suffice to say, comprehensive risk and money management strategies lie at the heart of all good trading plans. Okay, trading plan is almost like the goal, a plan on how we're gonna capitalize from the market, a plan that we're gonna be utilizing daily, each and every time that we open a trade, and we're gonna be following it. Like we're gonna go back to our trading plan and see what is required, if the trade that we're taking is worth it, and if it will lead us to be profitable in the long run. So what it states is that most traders without a trading plan, they can make money, but then in the long run, they won't be able to stay in the markets. But the one with the trading plan is more likely to stay for more than years in the markets. Okay, now let's take a look at who needs a trading plan. Unless you have been a constantly profitable trader over the sufficient length of time to encompass a number of different market conditions, then you need a trading plan. If you have achieved this, then this lesson may not tell you anything you do not already know. However, it may still prove useful as a refresher course, or indeed open your eyes to new aspects of trading that can improve your profitability. Okay, so who needs a trading plan? Unless like you've been a constantly profitable trader, like meaning that you've been making great percentage monthly. Let's say you're making 20% monthly consistently. Then like you can refresh with this, but then if it hasn't been that way, then you do need a trading plan. Because people, like it's possible to take your account from a small account to a very big account without a trading plan, but then can you do that consistently? That's what matters most. Okay, Jesus, now let's take a look at what a trading plan will do for us. A trading plan will make the act of trading simpler than it would be if you traded without one. It will limit your opportunity to make bad trades, and it will prevent many psychological issues from taking root. It will help you to achieve these things because wherever you are on your trading journey, it will not only act as a route map, but then also locate your position as well. Most importantly, if your trading is going badly, you will know it is down to one of only two possibilities. Either something in the plan is not working, or you are not adhering to the plan. And that is very true. I experienced that from my trading plan. I noted that most times if I don't follow my trading plan, that's when I take big losses, and that's when I go back on my portfolio. But then if I stick to my trading plan, even small lot sizes are able to give me great percentages monthly. Drafting a trading plan. Now let's take a look at the topics that we need to cover when we are drafting a trading plan. The first one is about knowing yourself and your purpose. Okay. Why do I want to be a trader? What sort of a trader am I? What are my strengths and weaknesses? Am I in the right time frame of mind to trade? What are my income targets? What are my annual trading goals? What are my monthly trading goals? And what are my weekly trading goals? As well, what are my daily trading goals? Okay, let's take a look at the markets, instruments, and time frame. Which markets will I trade? Which instruments will I trade? And which time frame will I trade? Meaning, with the markets will I trade forex market or the stock market, and which instruments Euro JPY or NZD, USD, all those. And then which time frame will I trade? Then you choose your time frame, daily or the hourly, or that's like it suits you. It's personal. It's a personal decision. So the tools of trade: which financial vehicles will I use to trade? Which broker and trading platform will I use to trade? And which software and data feeds will I use to trade? Okay, I believe we saw that. Now, there's some routines that you need to do before the market opens. Ne? So these are things that you need to note down. What is my daily pre-market routine? Have I analyzed yesterday's trades? Have I any positions open? What are my general market conditions? What will I do today, hour by hour? Which instruments are on my watch list? Okay, these are very important things before the market opens. And now let's take a look at the risk and money management. The first one is, what are my attitude towards risk? What is the overall market risk? What is the sector risk? And what is the broker and hardware risk? And what is the strategy risk? Okay, so you need to also take a look at that. Have defined answers for these questions so that you know on when you're entering the market and you're respecting your risk and you're following your plan. Specific risk management. What are the probabilities of a successful trade? What is the risk growth ratio? What is my risk per trade? Where will I place my stop loss orders? When will I stop trading? Okay. Also need to take a look at these, note it down in your trading plan. And here at where will I place my stop loss orders? Meaning that are you either gonna use, like, let's say you're gonna use 50 pips stop loss, nothing more, nothing less, just 50 pips no matter what happens, or are you gonna trade on what you're seeing? Let's say if you're seeing a rising wedge, are you gonna place your stop loss seeing that rising wedge? Okay. Now let's take a look at the general money management. Large drawdowns or in profits, what will I do? Meaning, if you experience large drawdowns or large profits, what will you do? Which money management approaches will I utilize? Will I lock in profits? How will I determine my position size? Okay, need to have answers for these. And then now we take a look at the exit strategy. Losing trades, will I exit before stop is hit? Losing trades, which signal will I see my exit early? Winning trades, which signal will see me exit completely? Okay. Winning trades, which signal will see me close half? Winning trades, which signal will see me close the remainder? Okay, so meaning that whether it's a losing trade or a winning trade, which signal are you gonna take to exit the trade? Like, meaning that if you're in you're winning, which signal will see you complete? Will see me exit completely. Meaning that it's a winning trade, it's giving you profits, but then you decide to close the trade and then go out. What will you see that will make you take that decision? Okay. I'm going to continue just reading this out, and then I'll give you a few of my examples in my trading plan. Okay, trade strategies, setups, and entries. Which strategies will I trade? What are my setups? How will I find my setups? Which signal will trigger my entry? Okay. Okay, so what I'll do now is that I'll just give you guys an example of my trading plan. Okay, trade strategies, setups, and entries. The first one states, which strategies will I trade? Now, what I've got here is that I've written my primary trading strategy is designed for a trending market. It is the breakout strategy which aims to jump on the bandwagon upon the continuation of a strong trend. My secondary trading strategy is designed for reversal patterns. It is a breakout strategy which aims to jump on a trade at the reversal of a trend. Did you guys see that? How I answered those questions? And then the second one that says, what are my setups? I've stated the setup for my primary strategy comprises the following elements. Price must be in a clear up or down trend according to my definition of a trend, which is creating a clear higher high and higher low, or a lower low and a lower high on my major time frames. Price breaks through yesterday's lows or highs of the day to make new high or low. Price pulls back to yesterday's highs or low, but does not follow elements. Okay. And my secondary strategy is that price should approach key resistance or support, forming a reversal pattern, yeah? And price breaks the pattern and corrects in a continuation form to confirm the next move. Did you guys see how I took those questions? Then we've got here, how will I find my setups? What I've got is that I've written, I will find the setups that I require by utilizing the TradingView platform, have pairs on the watch list that I can interpret the direction easily and wait for price to reveal the patterns to me. That's how I'm going to get the setups. and then which signals will trigger my entry. This entry trigger for my primary strategy is to go long when the price resumes the direction of the trend by correcting in a continuation pattern and breaking the pattern with an impulse candle. Okay, reverse for short trade, meaning that vice versa for a short trade. But then the entry for my secondary strategy is to go long once price reaches key support area with the reversal pattern and breaks the pattern with an impulse candle. And that's reverse for a short trade, meaning vice versa for a short trade. Okay, I believe you guys saw how I answered that, how I answered these kind of questions. Then after the market closes, have I recorded today's trades? Did I execute my trades according to the plan? Have I completed my trading journey? And you guys shouldn't take these for granted because it'll help you on you being able to stay consistent in the market, because it only means one thing. If you do obey your trading plan, you're gonna get the results that you have back tested. Okay. Now the discipline here. Let's take a look at it. Back test or forward test? What is it that you're gonna do? Are you gonna back test your pairs, or are you gonna forward test it? What are my promises to myself? What questions do I ask after winning trade? What questions do you ask after losing trade? What steps do I take to learn more about trading? Okay, meaning that you should get more knowledge on this one. On number 5, get more knowledge. And after losing trades, it doesn't have to be a losing trade if you gain something from it. Same thing with the winning trade. You don't have to just celebrate if you didn't gain anything from it. You need to learn from both sides. Okay. Golden trading rules. These are my rules on my trading plan. I've got 10 rules written down. Follow written trading plan. Keep learning on a daily basis. Cut the losses short and let profits run. Protect and preserve my capital. Trade what I see, not what I think. Never chase my losses, ever. Keep excellent records. Keep it simple and professional. Be an above average trader. Respect the trend. Okay, Jesus, now let's take a look at the backtesting topic. Okay, now we're going to cover these following mini subtopics. Intro, backtesting defined, why backtesting, benefits of backtesting, data analysis, key points, optimizing your process, backtesting 3-step success formula, ongoing backtesting commitment. Okay, let's take a look at the first one. Backtesting defined. It's a methodological way of testing the success of a particular predefined strategy over predefined markets over a period of time. It's a way to record previous and continuous trade data so certain assumptions can be made about a current or potential strategy. Meaning that backtesting, you can use it to determine on, like, let's say your win rate on a specific pair and about a specific strategy. Okay. Why backtesting? To make sure what we are doing works. Okay. Stop the wrong intellectualizing and generalizing. Have data point to drive your trading. Focus on determining factors, not contributing factors. Lose attachment to feelings and not knowing enough. Create a consistent approach, blueprint for real traders. If you are using discretion on top of strategy, is that discretion helping or hindering? Okay, if you are using a discretion on top of strategy, is that discretion helping or hindering? Measure your actual trades against your performance. Gives confidence and ownership. That is very true. The basic process of backtesting. You decide on one specific trading strategy with a clear set of decision-making criteria. Okay, meaning that you've got one pair. Okay, let's say one strategy that you've got, and then that strategy, before you enter the trade, you should have a criteria whereby you tick stuff off. Let's say it should be at support, you tick it off. You should print this type of a candle, tick it off. This type of pattern, tick it off. Okay, should be defined. You scroll back in time on the charts and find the setup. You screenshot the setup as if it was real time. You start to record the setup data in your spreadsheet. Write down your entry, your stop loss, your targets, and everything. And you scroll forward and record the results info. Repeat lots of times, meaning that you do the same thing multiple times. Benefits of backtesting. Forces you to be selective and get out of discretion. Get your eye in pattern recognition. You're able to spot your setups without even having to put your trend lines in. Shows you whether the strategy works over time. Shows you win-loss ratio. Shows your best risk reward. Shows your worst drawdown scenarios. Gives you ongoing confidence during drawdown. Meaning here on number 6, when it shows your worst drawdown scenarios, it means that even if you're experiencing losses, let's say you took five losses, the sixth one or the seventh one is more likely to be a profitable trade. Downsides of backtesting: it can be boring. It does get boring, that's true. Most don't test back enough. Ideally, you need 3 years worth of data per market for swing trades and 6 months worth of data per market for day trades as a maximum. Meaning that if you see here, we said for swing trades it's 3 years worth of data, and for day trades is 6 months worth of data. Meaning that you don't just go in the markets and then just backtest, but then you need to go back 3 years in time and then backtest, slowly coming forward with it. Okay, I believe you guys saw that. Biasing your results, feedback important. Okay, what are the key elements of backtesting? You need the trade number, you need the strategy, and then you need it's either going long or short, entry date, entry price, entry time, target, exit price, exit date, winner or loser, ratio, percentage change. Meaning, okay, let me just go a bit into depth with it. You need the trade number, meaning that you're on the sixth trade or the first one or any trade that you're taking. The strategy, right? If you have two strategies, you can note down, I'm using this specific strategy. If it's the second one, I'm using this specific strategy. And long or short, you going long or are you going short? Entry date, entry price, the time, the target, exit price, meaning that if it hit your stop loss, you write down the price that you took out at. If let's say you trail stopped, you tick down the price and the exit date to see how long it took, whether it's a winner or a loser, ratio and percentage change, meaning after you took the trades, how much percentage change? Like, did you gain a few extra percentage or did you lose a percent? Okay, and yeah, with the entry date, okay, no, with the entry time, it'll help you see when your setups like to play out. You might find out maybe, let's say 8 in the morning, most of your trades, that's when you get the entry. So you'll know, mostly you'll start waiting for 8 in the morning. Okay. And then with the long or short, you'll be able to see, okay, most of my long trades are hitting target, most of my short trades are hitting stop losses. So I should focus more on long trades. Can you guys see what that does? Optimizing data. Data optimization has to be goal driven. The data has to fit with how you can trade. Okay, that is true. Okay, now let's take a look at this timetable here. With strategy to trade. We've got 3 strategies here, ABC, and then we've got win, loss, average. We've got the risk reward, meaning that, okay, what strategy A gives us a win or loss average of 40%, meaning that we're winning 40% of our trades, and our risk reward is 3:1. But with strategy B, it gives us 50%, and then our strategy is our risk reward is 2:1. With the third strategy, it gives us 60% the win average, but then our risk reward is 1:1. Okay, now I want you guys to see something. Let's take a look at what happens down here. Find out that strategy A, the trade frequency is only 1 trade a month. You only get 1 trade a month. Okay, it's high probability, 1 trade a month. And 100 trading time total, it takes you 8.5 years. See, to take 100 trades took you 8.5 years. But then with strategy B, find out that it gives you 1 trade per week. Ne? And then 100 trade time in total, meaning that for you to get to 100 trades, find out that it took you 2 years. And then with strategy C, you can see here, let's say daily you get a trade each and every day. And then to reach 100 trade time, it takes you 4 months. So you also need to be on the lookout with the win percentage, the win-lose percentage, and the risk reward, and the trade frequency. Trade frequency plays a huge role in the strategy that you're choosing. Ideally to trade, the one that has the best win-loss average, okay, together with the best risk-reward ratio, together with the highest trade frequency, okay, this is the ideal setup. This is the ideal strategy. The one with the best win-loss average, meaning that the one that has the Doesn't have to be 80% or 90%, but then that has the best win or loss average. Together with the basic risk reward, it doesn't have to be like say 1:1, but then 1:2 or more. So that's a good one. And together with the highest trade frequency, meaning that you can get a trade maybe daily or twice, or 3 times a week. You don't have to just place one trade a month. So this is something like an ideal strategy to trade. Drawdowns on winners. They go into losing position first before I start winning. Losing runs, worst trading period. Okay, when you're experiencing a losing run, that's your worst trading period. So you also need to be, you have to know what your strategy is like. Meaning that like mine, I know I can get let's say 4 to 5 losing trades in a row. And then when I experience that, I don't panic and then start to use bigger lots or start to not obey my trading plan. I just remain calm, I remain humble, and then as time goes on, let's say on my 6th or 7th or 8th uh, trade, that's when it'll hit target and then it'll bring back most of my losses. And to use 3 years worth of data for swing trades. Okay. Okay. So you need to do backtesting yourself to have ownership, meaning that you have to you don't have if a person gives you a strategy, you don't just have to trade it because they gave you, but then do your own backtesting so you can also have confidence and ownership to say yes, I've got these results because of I have backtested, so I know what the strategy does for me. It really does work for me. Can you see it? So use screenshots to see data captured or traded before. Okay, have something like a checklist to check off before entering a trade, meaning that you should have something like a criteria that you need to enter a trade, whether it should be on support, whether it should give you this type of candle, whether it should be at resistance or it should be in an impulsive phase or correction. Have something like a checklist so you can check off. And most important factors in backtesting, do it. You should do it. Continue backtesting once you trade. Get feedback of what you're trading. Okay, you'll know what you're trading, and you'll even have confidence in the specific pair or symbol that you're trading, and you'll know which pairs are giving you great money and which pairs are taking your money. So that's one thing that you'll know. Okay, thank you so much for watching this lesson. As we're speaking about trading plan and backtesting, it's one of the most valuable lessons because people take these kind of this part of the trading for granted, only to know that it's what will give them consistency in the markets. But we thank you so much for watching. Please do take notes and watch again and again and again. Thank you.